Let's go. All right, guys. So I checked the mic. You guys should be able to hear me. Today I wanted to switch it up. I wanted to get in a different environment. It's so nice outside today. Yesterday it was freezing. Today it's nice. I'm at a nice hotel, and I wanted to enjoy outside. So if it's a little windy, I'm sorry. I'll try to pick up the volume later. But as of right now, I'm enjoying the day. So let's pick up where we left off. Let me go my outline. All right, so we skipped all the main content. I know I breezed through that really, really fast yesterday. It's for a reason, because honestly, you don't even need, like, that's all the core information, right? That's all the core content, all the core information you need to know in order to win. You can replay it back as much as you want. The most important part of it is to get past that, right? You want to get through that information, and you want to get to this, which is the more advanced part of the section, more advanced content. In fact, today, and if excuse me, it's a little hot. This thing is in my face, but I like it. It feels warm. So today I want to do a support and resistance deep dive. This video 9 or whatever, and we're gonna recap. Ooh, let me turn this down. Hold on, it's hot, y'all. It got a lot hotter all of a sudden. Turn that down a little bit. Y'all saw the flames. Y'all know the vibes. So yeah, today we're gonna do a support and resistance recap, and dig a lot deeper into why support and resistance is so important, why it's the main and primary thing that we use, and anything else. It's the foundation for our technical analysis. It's the foundation for our market. It's the foundation for everything that we do on the charts. It's the foundation for mastering the charts, right? In order to get a good breakdown of any chart that you want, you need to know support and resistance. You must know support and resistance. I am hitting that on the head because that is the foundation. That is how I relearned. That's how I learned, really, right? When I first jumped in, like I was telling y'all, I first got in those groups, I really didn't learn what I needed to know. And so learning support and resistance helped me really identify and break down the market in a way where it was effective for me, and I could actually, do it on my own, do it with confidence, and know where I'm at in these markets, know where I'm at, know what I'm doing. So it's extremely important that you guys get this information, right? And you guys overstay in support and resistance so that you can break down a chart wherever you're at, on your phone, on a laptop, however you feel, if you're traveling, if whatever you're doing, you know what I'm saying? Like, I could do this on vacation right now. I could do this when we're at a party that I don't want to be at. Like, I can do this whenever. And I think the freedom of that is so important, and that's really what I want to give to y'all. So that's where we're going in. I'm sorry that was long, but I be talking, bro. So what I want to do first actually is give y'all a little bit more glimpse. Let me zoom this in right quick. All right. So, and excuse me if you hear craziness, because I'm at a hotel, so how I go. This is a very nice area though, nice place, JW Marriott. I hope y'all have the chance to. Matter of fact, I know y'all have the chance to come to hotels like this and spend time like this with your family and loved ones, because that's what we're doing this for. Simple. All right, so going straight back into it, I'm gonna go back to the chart. Let me put my screen record on. I hope you guys are having an amazing day, because I am. Got up, got some more sleep. I'm still fighting this weird headache. I don't know why, but I'm not gonna let it stop me from giving y'all this content. You feel me? What y'all need to know. I'm not gonna let it stop me. Who gonna stop me, huh? All right. I know y'all probably like, this guy's a little crazy. Yeah, you have to be a little crazy to, one, be an entrepreneur, and two, succeed in any game. All right. So we're back at it. We're back in these charts. We're looking back at the total crypto market cap, excluding Bitcoin and Ethereum, like we talked about already. As you guys already see at this point, we've already went over all this in the other videos. I'm sticking to it for a reason, because now I just want to break down everything, right? And why, even more so, why it's significant in terms of support and resistance. As you see, we got a really, really good breakdown and glimpse into the market, and we haven't even done anything else yet, but really just dig into support and resistance, and have support and resistance levels, and have support and resistance zones. I showed you how to find the levels. Those are a lot simpler, right? The levels are highs and lows, significant volume highs and lows. So what I mean is where the market dropped from or rose from significantly, same here, previously in the past, they're going to end up being good zones. That's why this was such an effective zone, because if you look at it, this whole move from this point to this point right here where it pivoted up, you know, at 72%, a lot of bars. The point is, it's a significant drop in the market, right? Same with a significant rise. I mean, if you take this point right here, this level is obviously significant, like we talked about. And if you take this level and go here, you also get a similar type of rise. A lot more percent, though. But the point is, anytime you pick a significant level to make your, or a significant area of movement, volume, volatility to make your zones off of, to make your levels off of, which help you create your zones, you're going to always find a more effective support and resistance zone or level. So I like starting off the market. As you know, we're on the weekly, but to start off as a monthly, as you guys know, this is a super strong resistance level and a super strong support level, because the market pivoted very hard from both directions. So we might see some consolidation moving up and down through here throughout the next few weeks, months, etc. And I say might because we most likely will. But the beautiful part about knowing support and resistance is you can gauge anywhere you're at consistently and continually, no matter what's going on. You know what I mean? So like right here, as we were monitoring and going up, you see we've got a medium level that broke. It's probably going to come down to retest. That's why we did this. Actually, I did this on, I think I did this on this call yesterday, but the point is we did this to mark up our moves, right? This shows us our moves for the next few weeks, months, who knows? You know what I mean? We'll see as we go on, and we'll continually do this throughout, right? But support and resistance is what allowed me to do this. Now, I talked to you about how to find the levels. The zones are simple. I literally, let's go back to the monthly really, really quick. So I got these high levels, right? I've got my high level and my low level. So my highest high and my second lowest low, because the lowest low would be over here, right? But I've got my box of price volatility where I'm going to monitor it over the next month to years, etc. Let's see when it gets out, if it ever gets out. It's crypto, so it will get out. But you know, we got to always, like I told y'all, never have a set bias so that you can approach the markets unemotionally and with an open mind, and you'll win a lot more. All right, so the way that you create the support and resistance zone is literally, I'm gonna step it back over here. I'm gonna zoom in. You could just do this, honestly. So I literally take one of these rectangle boxes, and like I said, you can go over here. It's over here with its brushes, and you can favorite it, the rectangle, right? So that always appears down here, and it'll appear wherever you can move this around like this, however you want, right? Actually, I'll move it so you can see it in the video. So I'll take this box, like I just did, right? And I'll pull it from the top of the candle wick to where the body is at. So like you see the top of the white body. Matter of fact, I'll do another one just so you can see right here. Top of the wick to the body of the candle. Boom. So as you see, I got the top wick and I got the body of the nearest candle. So top wick, body, as you see, these two perfectly lined up. And the cool thing about this is you can do it actively, right? So this is the weekly one. This week ended right here. And let me zoom in even more. Sorry, y'all, it's hot. As y'all can see, when this week ended, you got another week. So you can literally be at the end of this week and create this zone before this even happens and see exactly why it happens. And that's why we use support and resistance levels and zones to break down our charts, because it's the most simplest form. We're keeping it stupid simple, right? We're following the rules. We're keeping it super simple. We're not complicating the markets. That's how you see data on a very simplistic level, and we want to do that continually. The more simple you keep this, the simpler it will be to identify whatever you need to do when you need to do it. Ooh, I might turn this off. I can't even breathe. Sorry, y'all. Ooh. All right. So yeah, the simpler we make this, as far as marking on the chart, the simpler it's going to be for us to continually see where we're at, where we want to be, and where we want to execute in the market, right? And then obviously you can go in deeper, you know, like I talked about, and this might pull me a little further, but let's see. Okay, that pulled me back, no problem. So now we're on the daily. We got to obviously go all the way back. Let me just shrink this like that. Come back over here. Boom. And as you can see, now you can start picking apart the market because you can see what's going on. You can see where it's at. All these wicks are really, really crazy. So you got to really dig into now the H4 to kind of see where you're at. But y'all get the point of what I'm showing you and how you can really use and leverage support and resistance to identify where you're at in the market. That's why it's extremely important, because it shows us all the data we need to know. And how do you make effective trades? You get the data. You find your data and you execute based off of data, not emotion, data. What's the next thing we got? So as you can see, what the market does at these levels is it pivots, right? It moves from them. And I'll go back to the weekly. We will zoom out. All right. And I hope you guys are just following along, locking in, got your pads and paper out, because this is an important lesson. So why do we do them? You know why. Why they're important is because of this, right? The significant zone. Obviously, now we were monitoring it way before, right? Trump got elected over here somewhere November 4th or something. Oh, it was the 6th, right? November 6th, Trump gets elected. Obviously, the market jumps and it keeps jumping. We can monitor it all the way through and block out price action all the way through, right? Continue to monitor all the way through. When we get here, right, we have our alerts ahead of time because we could do all of this ahead of time, and that's the beauty of starting on the monthly and going down. But once we get to this point, now we can see why it pivots. Now we can see why it stopped, right? Other people are like, oh, super bullets, which we're all bullets on crypto in general, right? Especially because of Trump's election. We're all bullish. We got a pro-crypto president. We got pro-crypto people starting to get some power. We're bullish on crypto. The key to all that, though, is even with all that fundamental stuff, right? We don't worry about that. We do the zones because, and pro tip, whenever a big news release happens, they always do it at one of these levels or zones. They do it on purpose to influence the market in one way or another, right? So what we see is when we get to this level, when it gets back here, it stops, it doesn't break. It reverses, creates a reversal, and then it starts dropping. We would know exactly when to get out because we can see it. So as soon as this candle stopped, and I'll zoom in, let's get up tight on that candle. As soon as this candle stopped on December 2nd, right, and failed to break it, we could have got out, or at least got out 50% of our position if we didn't do that already, or at least got out 25%. You know what I'm saying? Hold 10% if you want to, but take majority of our profits and see what happens. React based off of what we're seeing and what's happening on the market, right? And that's exactly what we see here. The market stopped, it failed, it's going down, period. Simple enough. And then we find another zone or level, in this case, where we might see it pivot back up again or have another significant move from because it did that before, right? This was a significant jump and increase in volume from here to here, right? So we can expect another significant movement or pivot around that same level. That's what the market is. It's historic levels being bounced off of and broken all day long, and that's what we want to use and what we want to see. Now, typically, I don't like using broken levels, which means it's already got broken, to make a basis off of, but it does give us a good midpoint in this case where there's nothing else there. We got to use it. You know what I mean? We got to have something. We got to be able to see. So that's what that's there for. All right. I explained how it points to everything. That was my next point. You guys can see how it points to everything. You can see how this helps you identify wherever you're at in the market consistently, continually, and you can see why this is going to help you win, why it's going to help you guys be able to see what you want to take efficient and effective trades. You can see why you can trade on the monthly, weekly, daily, etc. to go within your schedule, however your schedule is, right? And you can see why this is so important to be able to map out these levels continually so you can always know where you're at, so you can always be able to look at a chart and see where you're at, right? You can use alerts to pinpoint when that level is going to hit. The alert triggers, boom. Let's say you were in a trade on the 6th, the alert triggers, boom, oh, you're out now. Or you were liquidating 50% of your position and you didn't even have to look at the chart. You didn't even have to look back at the chart. You had it already there, so you know, right? But you should always look back at the chart, because why not? It takes 5 minutes, especially when you already did all the work, right? So everything is either coming to or leaving one of these levels or zones, period, all the time, every time. Now, I know you're going to be like, well, what happens when we break this high, right? What happens when we get past here and there's no more levels or zones? It's going to create new ones and we'll use those, right? We don't enter in no man's land. Once it breaks past here and we got nothing to work with, we don't enter. We be patient. We should have already been in, right? And we should be in right when we leave the level, like right when it breaks this level and gives us a retest. That's when we should enter, right? So when it does this, whether it takes this or just in general, I'll just give you an example. Boom, 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 boom. When it's up here in no man's land, obviously we ain't got no levels yet. Hold on, let me wait for the wind. It's so beautiful out today, y'all. Whew. Thank you, Jesus, for this day. All right. So once it breaks and retests this level, that's where we should get in, right? So by the time it gets up here and it starts doing crazy stuff, we should already locked in our position with some profit, so it really doesn't matter. And that's the point. Don't enter late when you can enter early. You know what I'm saying? What I mean by that is an entry or retest, that's an entry early. And that's a strategic and safer entry early. If you just get in when it breaks, I mean, hey, that's an early entry, but you might encounter some drawdown. And that's, if you're cool with that, it's okay. That's why we use our stop loss tool, like we showed you, the little long tool. I think this is the long one, right? So let's break this level. Yep, that's why we use this, so we can see what we're risking. Simple as that. Boom, get rid of that. All right, so yes, once this happens though, it'll create, and I'll go like this, and we'll just keep working with it. It'll create new zones, new levels for us to react off of. You know what I'm saying? I'll leave that there. I'll scoot that over. It'll create new levels for us to react off of and be able to box the market in, be able to box price in, so we know exactly what we're doing, why we're doing it, and when to get in or out. It's simple. Keep it simple. Keep it stupid simple, because it is simple. That's it for this video. And we're going to get to the next video. We're going to talk about MSR levels. This is exciting because it helps you even more. Once you already have this locked down, this next part is going to wow you. You're going to be like, oh, wow, I can see everything even clearer. Let's get it.